Hello, everyone. Thank you all for joining us for our How to Review Your Vendor's Financial Health, a walkthrough of financial documents webinar. My name is Jessie Redmond, and I will be your host. On your screen, you should see multiple widgets that you can use, including Ask Question, Media Player, Slides, Related Content, Speaker Bio, Request Demo, and Help. If you are unfamiliar with our webinars, all the widget boxes are resizable and movable, so feel free to move them around to maximize your screen space. At the bottom of your screen in the toolbar are icon buttons you can use to show and hide the widgets. You can expand your slide area or maximize it to full screen by clicking on the arrows in the top right corner of the widget. If you experience any issues or have technical questions, you can use the Help widget or submit them along with any other questions through the Ask Question widget. Don't worry, we do capture all questions throughout the session. We will be answering some during the webcast, but those that we do not have a chance to answer live, we will address with you via email. Today's live session is eligible for 1 CPE credit. If you wish to receive this credit, please remember to be logged in individually with your own credentials, answer all 3 of the polling questions that will appear on your screen during today's presentation, be in attendance for the entire live 1-hour session, and complete the follow-up survey. We will send the link to the follow-up survey 24 hours after the session concludes. If you meet all requirements, we will send your CPE certificate within 5 to 7 business days following survey submission. With us today, we have Raman Zachariah, VendMinder's Chief Financial Officer. He will walk you through different types of financial documents and how to review those documents. Raman will also provide you with an understanding of vendor financial health importance and help your organization make informed vendor decisions. You will see a link to a copy of today's slide deck, a link to our website, a link to our samples library, links to our 3 vendor financial statements to review infographic, our 6 actions to take after reviewing a vendor's financial infographic, our The Importance of Vendor and Supplier Financial Performance ebook, as well as a link to a library of additional resources, all in the Related Content widget. With all that being said, I would like to hand it over to Raman. Raman, the floor is yours.
Thank you, Jessie, and hey, everyone. We'll quickly go over today's session agenda here, and then we'll dive right in and talk through each of these items. We'll first jump into what vendor financial health is. We'll then talk a little bit about the details and the different types of financial documents you need to review. We'll then combine that with a quantitative and qualitative review and what you can use to do your vendor financial health reviews. And then a walkthrough of the individual financial statements line by line. And then finally, we'll end with some key takeaways that you can use in your day-to-day processes. So let's just jump right in. So it's important to understand the what, the why, and the when as it pertains to vendor financial reviews. As it pertains to the what, financial risk is ultimately the likelihood that your organization may end up in a precarious position if the vendor has poor financial health. So you want to look for some of the red flags identified here that we'll talk about more in detail. The why of financial health reviews is important as well because it helps identify whether or not a vendor or a group of vendors can support their contract and therefore your business if they're critical to your operations. So the more critical they are, the more you'll need to scrutinize their vendor financial information. And the when really focuses around when you do these financial reviews. So usually it's either pre-contract or during onboarding or on an ongoing basis. So we'll talk about the cadence and common types of timelines you'll use with different vendors of different criticality levels and different risk levels. A great visual and a great understanding of why vendor financial health reviews are important is this notion of the domino effect. So if a vendor has poor or declining financial performance, it leads to the domino effect of risks that could be posed to your organization because the vendor is put in a precarious position as it pertains to their financial health. So when a vendor has something like declining revenue or declining income, they ultimately will make some things like cost cuts, which means cutting staff, which means ultimately perhaps some declining service levels, declining response times, and then ultimately it could lead to a data breach or lead to some sort of issue beyond financial health that is very critical to your organization's well-being and your risk profile. So again, this is another reason why there's a butterfly effect, or in this case, a domino effect of vendor financial health, and why you'll be doing some of these financial health reviews on a regular basis as it pertains to your vendor base. So the next question you may have is how you avoid the domino effect and where you should start. So it's important to first prioritize conducting these financial health reviews on key vendors, which can be defined as your internal risk management program defines them. Criticality levels is also a great place to start. So if the vendor is very critical to your organization, you probably want to prioritize those financial reviews on those subsets of vendors. You'll also want to define a regular cadence at a minimum on an annual basis, but you can do it as frequently as quarterly or even monthly as your time allows and as you have the staffing or ability to do so. And you want to create repeatable processes and repeatable questionnaires and due diligence request lists you'll want to use. This helps provide you with some scalability and also consistency when you're performing these reviews, and also allows you to create a methodology that people can interpret and use. If you get a question from your regulators or examiners, this is also a great place to refer to make sure that you're doing the adequate work. Don't wait for the regulators or the guidance from regulators to do these financial health reviews. It's always great to just get started with something and then perfect your process or improve your process over time. So let's jump right into the first poll question of the day. Jesse, go ahead and take it away.
And this brings us to the first poll question of the day. You should see the poll question now in the slides area. If you have any issues, please feel free to send us a message using the Ask Question widget, and we will be happy to assist. As a reminder, if you wish to receive the CPE credit for today's session, you must answer all poll questions and be in attendance for the entire live session. This poll question is, how often do you perform vendor financial health reviews? Once a year, once a quarter, once a month, never, other, or not sure? Raman, we have some time now to answer one of the questions from the audience. And this question is there specific information we should prioritize or put more emphasis on when performing financial health reviews?
Thank you, Jesse, and thank you all for joining today. This is a good question and a common one as well. So for starters, you want to really look at 3 of the financial statements to really extract some key information from them. And those financial statements, as we'll talk about more in depth today, are the income statement, the balance sheet, and the cash flow statement. You can calculate some key ratios and some margins and things that are helpful to add some context to the information you extract from a quantitative basis from these 3 financial statements. And then from there, you'll want to couple that with some qualitative information, which typically is found in, if there is an audit, some sort of management discussion and analysis or footnotes that are provided by the company or the vendor you're reviewing. And then from that, combine those 2 pieces of high-level information, those quantitative metrics from the financial statements, as well as the qualitative disclosures and information provided by the vendor's management or the vendor's auditors, if there is an audit, and ultimately arrive at something that you can risk rate and continue to build upon in your internal risk management practices. So start with the quantitative, add the qualitative, and risk rate it and build off of there and that foundation. Back over to you, Jesse.
Thanks everyone for answering that poll question. Here are those results. By the way, you may have noticed reactions such as a thumbs up or heart coming across the screen. If you find this feature distracting, you can turn it off by clicking the 4 arrows in the top right-hand corner of the slides widget, which will expand the slides to full screen and no longer show the reactions. Before we move on, as a reminder, in the related content widget, you'll find The Importance of Vendor and Supplier Financial Performance ebook. This is a handy resource to grab as it goes in depth regarding the importance of financial performance and assessments. With that, I will hand it back to you, Raman.
Thanks, Jesse, and thank you all for answering that first poll question. So from what type of information to review, well, let's start first with talking about the quantitative information. So there's no single financial statement from a vendor that will provide a full picture of a vendor's financial health. So you'll want to focus on the 3 main ones and 3 primary ones we've highlighted here, which are the income statement, the balance sheet, and the cash flow statement. The income statement focuses on revenue, profitability, and a vendor's costs, also known as the statement of operations or P&L. The balance sheet focuses on the assets and the liabilities broadly that the vendor has and the liquidity that the vendor has. And the cash flow statement shows how the cash is being used or how the cash is coming in from a vendor's operations, as well as the vendor's investing activities and financing activities. So let's dig a little bit more on the next few slides. First, let's start with the income statement. So again, this is a review of what the vendor's revenue, cost profile, and profitability profile are over a period of time. So this is important to review because it helps you as the reviewer identify trends and patterns in a vendor's financial performance and ultimately look into or scrutinize these trends and performance levels over time. At the end of the day, the income statement is important because it shows you how the vendor generates revenue and makes money, and also how efficient and sustainable a vendor is in its operations in terms of selling and servicing customers. It's a good indicator on whether or not the vendor has sufficient or insufficient revenue and profitability through its operations, and it ultimately helps also lay the foundation that can be bolstered by reviewing the other financial documents and information. So let's dig in on some key line items on the following pages, and also how to look at an income statement. So where to find the income statement? When you're dealing with public companies, especially those that are based in the US, it's all available on the Securities and Exchange Commission's EDGAR website, the SEC's EDGAR website. So that's pretty easy to do and find publicly on a regular basis. They'll file audit on a quarterly and an annual basis whenever needed. On the other hand, private companies is a bit of a mixed bag. You'll have to ultimately work with those vendors to get some level of information. Either they're audited financial statements or company prepared financial statements, or oftentimes they won't even give you those and they'll just give you a financial letter. But at the end of the day, an income statement generally has some key line items that we've highlighted here that you should focus on and dig into. Total revenue, gross profit margin, operating income, and net income are 5 of the key items if you were to extract the most important things, and you also want to look at them over a multi-year period, as we'll discuss. So to add some pragmatic advice and some practicality, let's look at a public company's financial statement and its income statement, in this case, Salesforce, and this is over 3 years. This is a common IT vendor that maybe many of you are already working with. They provide CRM or customer relationship management software, among many other technology. But in their annual filing, their 10K that's reported again publicly to the SEC, you can find Salesforce income statement detail that we've pasted a screenshot of here on page 61 of their 104 of their annual report. So you got to dig a little bit, but you'll find it, and in there you'll find some of the key line items we'll walk through in the next couple pages. As you can see here, this is actually the same screenshot, but made a little bit bigger so you can get an understanding of the individual line items and the segmentations that Salesforce's income statement shows. Again, not every income statement from a vendor looks the same, but generally we'll have things like revenue, cost of revenue or cost of goods sold, gross profit, operating expenses, and then different profitability metrics such as income from operations or operating income, and net income, which all public companies have to report on. Private companies do as well as it pertains to their profitability and performance. So in here, you'll want to focus on a handful of these items and pull those out and risk rate them when you're doing your vendor financial reviews. So let's walk through a couple of those on the following pages. As we've highlighted here, these are those same top line items that we talked about a few pages ago, right? So Salesforce provides a segmentation of their revenue line items as well as their cost of revenue line items. But when you're strapped for time or you just want to look at the key headline items, you want to just focus on that total revenue trend and that total revenue line item. You can see their growth, you can see the mix of their revenue between subscription, support, and professional services and other. So doing a revenue analysis, even if it's at the high level or the total revenue basis, is important when you're doing these vendor financial reviews. Thereafter, you'll want to look at something like gross profit, which then you can use to calculate gross profit margin, which is gross profit divided by total revenue. And then from there, you want to finalize your high-level review by looking at their profitability metrics beyond gross profit. So income from operations is important in this case, as well as net income. And you want to, again, use multiple years if possible on all of these metrics in the income statement so you can perform a trended analysis and look at how the trend has evolved over time, in this case for Salesforce, but in all cases for all of the vendors you deal with and perform vendor financial health reviews on. So now that you understand Salesforce and where to find those key line items and how to look at those key line items within an overall annual report or a report that's given to you, it's important to take a step back and review the financial health and the income statement in this particular case across those line items. So once you gather those pieces of information, again, the 5 or 6 most common that we've shown you here, you'll want to risk rate them and then trend them from an assessment over time so you get a better understanding of how they have performed over a multi-year period, and factoring in things like how big the company is. Are they profitable? Are they not? And maybe even look at some of the context behind it. So for Salesforce, we had revenue segments, right? So you can also analyze those if need be and if your time allows for it. But you can comment on those segments and the performance within them in the footnotes or in the executive summary you'll review that we'll talk about a bit later. So this hopefully gives you an understanding of how to take and extract that information and then ultimately risk rate it line by line so you have a good understanding of it. So now that we finished on the income statement, let's actually proceed and dig into the balance sheet. So as we talked about early on in this presentation, the balance sheet is important because it shows a vendor's financial position at a single point in time and how those assets and liabilities that the vendor have trend as of that single point in time. And again, you can use this over multiple periods as we'll talk about. But overall, the balance sheet is important because it reveals key items such as the vendor's cash and liquidity and whether or not the vendor has adequate levels of assets to cover its liabilities and its obligations. So if the vendor in your review of the balance sheet has too much debt or liabilities and insufficient cash, liquidity, and assets, it may require certain capital infusion to sustain its operations, which ultimately is the most important thing to understand in your vendor financial health reviews. Can they support the contracts that they've committed to, including the contract that they've signed up for with you? So similarly to the income statement, the balance sheet can be found within an overall annual report or a report that's provided or some details that are provided directly from the vendor. Again, for public companies, it's just another subset of tables or a table that is found within that annual report or those quarterly reports you review. When you deal with private vendors, it's going to be similarly in that if you get certain comparable information, or you'll have to just get extractions of certain line items that we've highlighted here directly from the vendor. Again, focusing on total liquidity, focusing on assets versus liabilities, and then being able to understand their key ratios such as their book value or their tangible net worth and their total net worth is important. So let's use the example, let's carry over the example from Salesforce again, but this time focus on the balance sheet as opposed to the income statement. So when you look at the annual report, in this case, Salesforce's last year's annual report, you'll find that they list their balance sheet detail in a table on page 60 of 104 in their annual report or their 10K. Again, if you're dealing with a private vendor, they'll similarly have this early on in their audited financial statements or even in their unaudited information they provide to you. And it may have some unique line items, but generally speaking, there will be some patterns in terms of the overall line items you'll want to extract and focus on as it pertains to your vendor financial health reviews. So let's dig in a little bit more on the specifics as it pertains to Salesforce here. So as you see, you'll actually get a couple periods of financials, in this case, 2 periods of balance sheets that are a single point in time. So this represents the balance sheet for Salesforce as of the January 31st, 2022 period and January 31st, 2021 period. So that means over those time periods, this is what their assets and their liabilities and their equity are made up of. Again, it can seem overwhelming, especially when you look at multiple different types of balance sheets, but we're here to help you understand the key takeaways and some of the key line items and extract those so you can use them in your repeatable processes and your repeatable financial health reviews. So let's dig in on some of the key line items in this screenshot that you'll want to focus on for not only Salesforce, but many other companies you'll want to review. So as mentioned a couple slides ago, here are some of the key line items you'll always want to pay close attention to. And again, there might be unique names for these, but generally speaking, they will follow similar conventions because accounting is not that complex as it pertains to some of the naming conventions. So first, you'll always want to start with something like cash and cash equivalents, so total cash. That ultimately shows how much the cash the vendor has available at the single point in time. You'll then want to focus on something like accounts receivable, which is cash that is yet to be collected but has been billed to customers to ultimately pay the vendor or pay that company you're reviewing, and effectively show the ability for the vendor to create liquidity when they collect on it in the future. The third line item highlighted here is total current assets, which is the assets that have a life of less than 12 months. This is important because these are very liquid and can be converted into cash quickly, either in the form of cash or in the case of something like accounts receivable, when and if they collect on the cash that is available to them from said relationships with customers. Beyond that, looking at items like goodwill, total assets, debt, total current liabilities, and also the composition of the vendor's equity is important because it identifies how much obligations that the company has, both from a debt side and a liability side, as well as how much equity they've raised from external sources. So did someone finance them, and how have they supported their operations through external financing, such as equity infusions. So hopefully this gives you good context to be able to do the reviews that we'll talk about on the next page. So now that you have that baseline understanding of those key line items, again, similar to the income statement analysis and the review, you'll want to take those pieces of information at a high level and you want to review them line by line and look at them in the aggregate. So in this case, for Salesforce, we've extracted those key line items from their financial statement, their balance sheet, and ultimately summarized them in a review and looked at each individual line item and rated it accordingly. And then also looked at it from a trend basis over time to see how Salesforce's assets and liabilities have progressed over time. At the end of the day, this is done in isolation, but when we finally do a risk review, you'll want to combine this information with income statement review and the cash flow statement review, among other things, to ultimately arrive at your risk rating that we'll talk about a bit later. But let's jump right into the cash flow statement now and how to review that. So the third and final financial statement of importance is that cash flow statement. So this financial statement helps understand whether or not the vendor generates cash or consumes cash through its business operations and how it relies on external sources, either through debt funding or equity funding, to sustain its operations or to sustain its growth trajectory. So reviewing a cash flow statement is important because it provides insight into the vendor's normal course business model and in their normal course operations, how they generate or do not generate cash at any given point in time, and then also whether or not they depend on external sources, either through debt or equity, and how they invest some of their cash, maybe in some capital spending or capital activities and projects to sustain their operations. So similar to the income statement and balance sheet, let's focus on some of the key line items you'll want to look for and reviewing a cash flow statement. So again, when you're dealing with a public vendor, this information is readily available in the public company's financial statements they report to the SEC, specifically if they're a US-based or US-listed company. If you're dealing with a private vendor, again, you'll find a cash flow statement in their audited financial statements or even in their unaudited financial statements they give you. But beyond that, they can also give you summaries of some of the key line items we'll talk about. You'll want to focus on 5 key line items when you're doing a cash flow statement review. Beginning cash, cash flow from or used in operations, investing, and financing, and ending cash. And all of these ultimately sum up to a net cash flow, which means the change in cash, which ultimately bridges beginning cash to ending cash in any given period that we'll talk about. So let's do the cash flow review, again, using Salesforce as our example. So again, this is a screenshot of where the cash flow statement is found in Salesforce's filing. If you were to go and follow along using their fiscal year 2022 filing, you can find this cash flow statement screenshot and table in page 64 of their annual report in fiscal year 2022. So let's zoom right in and focus on some of those key line items we just walked through. As you can see here, these are some of the components as we've talked about. The operating or cash flow from operations section is near the top, and you'll see all of the line items that bridge that total number of net cash provided by operations or operating activity. You'll see the investing or cash flow from investing in that second section, and ultimately the line items and the specifics that bridge to the net cash provided or used in investing activities. And finally, that third section, cash flow from financing or financing activities as it's shown here, shows the components as to what Salesforce uses from an external sourcing perspective to support their operations and their cash position. And all of that, the sum of all three of those in the aggregate ultimately gets you to that net cash change or net cash flow, and how the beginning cash bridges to the ending cash that ultimately ties back to the balance sheet. So let's focus on some of those key line items we just walked through and what you can do to extract them and ultimately review and understand them. So again, most of these cash flow statements will have different specific line items or different naming conventions, but at the end of the day, you'll want to focus on some of the key ones that we've highlighted here and extract them to just get the story across and get the review as succinct and as focused on the critical items as possible. So you'll want to focus again on the net cash used or provided by operating activities, the net cash used or provided from investing activities, and the net cash provided or used from financing activities. Again, this could be all named cash flow from operations, investing, and financing as well. Those are different naming conventions. And ultimately, those bridge to a net cash flow when you sum them up and help you get from beginning cash in a given period to ending cash in a given period. So once you've understood and have extracted those high-level pieces of information, it's good to similarly review them and put them in your analysis, like we did with the income statement line items and the balance sheet line items. So gather multiple years is a good rule of thumb across all pieces of quantitative or financial information, as you've seen here, so you can perform a trended analysis. And then ultimately look at the cash flow statement to summarize how the vendor's cash profile or liquidity profile has trended over time. This is, again, what you want to extract by looking at this information, and will help you kind of inform some of the other things that we'll talk about on the next pages before we go on to our next poll question. So now that we've walked through all three of the key financial statements and some of the key line items that you'll want to extract from those financial statements, you'll want to now calculate some key ratios from those quantitative pieces of information you've extracted from the income statement, the balance sheet, and the cash flow statement, and also assess and review those. So these are some examples. These are illustrative examples as what we've seen works best for companies to get an assessment of key line items from the income statement, the balance sheet, and the cash flow statement. The current ratio is current assets divided by current liabilities. It helps depict liquidity in a different way using the balance sheet. AR turnover or accounts receivable turnover means how quickly or how slowly a vendor is converting their accounts receivable or collecting it into cash. You'll also want to focus on some leverage ratios, such as total liabilities divided by net worth or total liabilities divided by tangible net worth, to understand how much liabilities the vendor has in comparison to some of the equity and some of the assets that the business has in their balance sheet. And then you'll want to focus on profitability margins, in this case, net income over total revenue, or you can do operating income over total revenue. And then goodwill as a percent of total assets. So this is important because it shows how much intangible assets a vendor has in its balance sheet in comparison to their tangible assets, because intangible assets are harder to convert into cash and therefore liquidity, which ultimately, again, is one of the key reasons why you want to do a vendor financial health review, whether or not they have liquidity to support and sustain their contractual obligations to you and perform those without having to be in trouble from a vendor financial health point of view. So to summarize, here are some do's and don'ts with some of this quantitative information, right? So as we walk through very quickly on some of the example slides, financial reports can be arduous and long to read through, right? So you definitely do not want to review all of the pieces of information within the pages, and you'll definitely want to focus on some of the concise and important and critical line items that we've walked through today. although we didn't talk through every critical line item and some things may be critical for you versus others, these are the best representative examples of what you need to focus on, both within the quantitative side and then, as we'll talk about here shortly, the qualitative side as well. So focus on those three key statements, focus on cash liquidity, revenue, profit, and debt, and then pull multiple periods for trend analysis and add key ratios for additional context and support. And definitely don't just use one piece of information and do not drown in the data or use no ratios to support your review. So hopefully these are some quick do's and don'ts you can implement or put as a reminder when you're doing these vendor financial reviews so you're not overwhelmed going through the exercise. So with that, I'll turn it over to Jesse for our next poll question. Jesse, take it away.
Our second poll question of the day is, do you have subject matter experts who perform financial health reviews? Yes, they are full-time internal resources. Yes, they are outsourced external resources. No, other, or not sure. Raman, I have another question here that we can answer from the audience. And this question is, how often should our organization perform financial health reviews or assessments?
Thank you, Jesse. So there's no hard and fast rule on this, but at a minimum, it's a best practice to do it on an annual basis, especially as you start to look at your critical or higher risk vendors that you've identified for your organization. But beyond that, depending on the findings, you could also increase the cadence or make it quarterly or monthly, again, depending on what your risk ratings are and the overall structure of your third-party risk management program's risk appetite. But just start with something small first. Again, even if it's putting someone on a monitoring slot or doing some high-level screening and questionnaires for your vendors, especially those that are critical to your organization, you can do those once a year at a minimum. That will help get you on the right footing to improve your processes and perhaps do them on a more regular basis with a consistent deliverable as you move forward, and even increase the number of vendors you have a review over. Hopefully that helps. Back over to you, Jesse.
Thanks, Raman. We've got about 20 seconds left on this open poll question, so please submit those responses momentarily. If you have any issues, please feel free to send us a message using the Ask Question widget, and we will be happy to help. We will close out in about 5 seconds. Thanks. Okay, here are the results. Thanks again, everyone, for taking the time to answer the poll. In the related content widget, you will find our 3 vendor financial statements to review infographic. This walks you through a high-level overview of each financial statement to review, the income statement, balance sheet, and cash flow statement. Be sure to check it out. Raman, back to you.
Thank you, Jesse, and thank you all again for answering that poll question. Informative. So I previewed this a little bit to end the prior section, but let's jump right in from a qualitative point of view and qualitative disclosures you want to combine with those financial or quantitative information we just talked through. So numbers are important, but you also need context behind the numbers. And ultimately, the context is found in management discussion and analysis, risk factors, and footnotes that either the auditors provide if they have audited financial statements, that vendor has audited financial statements, or the management team or operators provide within their footnotes or within their detailed management discussion and analysis sections within the reports you'll be reviewing. So there's an abundance of this information as well, similar to quantitative information. So we're here to help you kind of tailor and focus your time on the most concise but important and critical items to include in your financial health reviews. So let's jump right into some of the information to review. So taking Salesforce as the example again, looking at their annual report or looking at some of the key qualitative information that is described in those reports is important. So in this case, I'm sure a lot of you use the Control-F or Control-Find part of your keyboard when you're looking at PDFs or when you're looking through documents online. So using Control-F, especially when combined with some of the knowledge you gained today from these financial health review tips, is going to be your best friend if you don't have some sort of AI or machine learning extraction technology. So as it pertains to qualitative information, You want to focus on risk factors. You also want to focus on sections like management discussion and analysis, because this is the voice of the management team giving you context behind some of the trends and some of the highlights within the quantitative disclosures, as well as other things that they want to highlight to you. You also want to read the audit opinion or letter, if that's available, to give you additional context and comfort around the professional firm that reviewed the vendor's financials in this case and what they found during their review. So now that you understand how to find some of this information, here are some common qualitative disclosures to look for and dive into during your financial reviews. That audit opinion is important. Subsequent events and disclosures are important. Any sort of uncertainties or estimates that the vendor uses are important. Any sort of reviews on internal controls. And then anything as it pertains to the context behind certain write-downs, certain trends, any litigation or legal disclosures they provide, customer or vendor concentration, data breach issues or security issues, they may disclose those if they're material, and then other risk factors that they define, and any sort of additional financing that they've gotten. All of these are very important, and again, could be used side by side with those quantitative reviews that we talked through in detail in the prior section. So here's another example of some of the key information that you'll want to extract from a qualitative point of view. Again, focused on audit opinions. In this case, the audit opinion, especially when you're looking at a public company's financials and even a private company's audited financials, usually precede the financial statement tables and can be lengthy. But you'll want to look for the terms unqualified, which means a good audit opinion or a clean audit opinion, or qualified, or what typically means perhaps a bad, or they've qualified it with some sort of finding. In this case, for Salesforce, they had an unqualified opinion, and the accountant or the public accounting firm detailed it. But here's a screenshot of some of the key findings, both the opinion on the statement as well as the basis and what they focused on, and as a third-party auditing firm. From there, you also see key information about the auditor name, as well as when they reviewed it and how they ultimately did their work, right? So they'll give you disclosures, the limitations of their review, and ultimately give you some additional insight as to how thorough they were and who did it. So you can get some additional comfort that other people have looked at these financial statements from a professional standpoint, and in their professional point of view, have offered their opinion to them before you dig into some of the other footnotes and context that are provided within the rest of the information you're reviewing. Beyond the audit opinion, you'll want to focus on other things like risk factors, which again are very common for public companies, but oftentimes are also shown in private company financial statements as well. So these, in the case of Salesforce, are 20+ pages long, so you definitely don't want to read all of them, but they may have useful tidbits to point out to your attention if you're in need of additional context around certain things that you found in your quantitative reviews. So in this case, this is management's point of view on some of their risks that they're identifying and things you'll want to be cognizant of and extract and maybe use again in your contextual points when you're doing an executive summary or landing at your overall risk rating as it pertains to your vendor financial health reviews. Similarly with the quantitative information, on the qualitative side, here are some best practices on do's and don'ts with qualitative information. So like we talked about, there's a ton of information available within vendor financial statements. So rather than having to look through all of them, focusing on some of the things we just talked about, whether that be risk factors, audit opinions, management discussion analysis points, talks about trends, talks about legal and litigation items, you'll want to just be very focused and tailored in those searches, right? So once you have enough of that information or best practice information available, just search for those directly. But focus, if you're strapped for time, on the audit opinion and then those trends and those legal and litigation items, because those are your best bang for your buck in terms of getting enough of a risk profile on the vendor's qualitative side. Definitely don't read every footnote or supplemental disclosure because it's very time consuming. And definitely don't ignore the audit opinion and the management discussion analysis entirely. And finally, to end with, you definitely just don't want to focus on just the qualitative findings and not combine them with the quantitative side, because context is very important, right? So using just the numbers is not good, and using just the qualitative information is not good. Using them both together helps you extend into a better, more comprehensive review of the vendor's financial profile. So now that you've collected all of the information and reviewed it, you may be asking, now what, right? Just so what? So ultimately, you want to take a step back and look at the overall picture of what you're trying to accomplish, right? So this ultimately results in a risk rating, or what you're doing in your third-party risk management or vendor risk management or supplier risk management program is to ultimately risk rate these vendors from a vendor financial health review profile, right? So this boils down to the methodology and the risk appetite you define internally, right? So don't overcomplicate this part, but definitely keep it defined so it's repeatable and understandable both by your internal constituents and collaborators who are doing these reviews and collaborating on these reviews, but also to external providers, whether that be your examiners or your auditors, or even your board or other people who may not be in the weeds with you on a day-to-day basis. So we'll give you a little bit of examples on the next few pages that you can use in your program today and continue to mature it as it pertains to vendor financial health reviews. So as mentioned, you want to arrive at the so what, which is a risk rating on vendor financial health, right? Well, it's definitely fun being a CPA myself, reading footnotes and performing analyses on financials. The ultimate goal of this review is to arrive at whether or not a vendor is financially viable to perform against its contractual obligations that they've committed to for you, right? You want to avoid that domino effect we talked about at the beginning of the presentation, right? So you want to do that by making it very easy to understand the risks as it pertains to the vendor's financial health, and creating a clear, concise, and actionable risk scale so that your team can do this repeatably and also interpret it repeatably, right? So alone, these risk ratings are good to have, but the action behind the risk ratings as you define it in your program are even more important and can drive better actions as you define the risk, as you review the information, and then as you repeat this and try to extend it beyond just looking at these pieces of information in isolation. So to sum it up, let's actually do it on Salesforce so you guys get a pragmatic example of all of the pieces of information we've reviewed and how it ultimately results in an overall risk rating and an overall executive summary we've done for you here. So within the report, you'll want to ultimately, in a vendor financial health review, want to summarize some of the key contextual findings and some of the quantitative findings that we talked about that are displayed here. And then you'll ultimately want to arrive at a confident score in this case, or any sort of risk score that you've defined based upon the information and the categorizations of some of the risks that you've identified, right? In the case of what we reviewed on Salesforce, there's healthy trends across of the key quantitative information. There aren't any major or material red flags on the qualitative side. So as such, putting a low risk score or a confidence score in what we've defined in the prior page on a risk rating methodology perspective is where we landed. So to sum it up, this is what you ultimately want to get to when you're doing your financial health reviews, and then use those risk ratings and use those actions based upon those risk ratings to ultimately drive next steps or actions across your organization, whether that be enforcing your contract, as we'll talk about, or perhaps even exiting the contract and finding a new vendor. So with that, we'll turn it over to Jesse for the final poll question of the day. Jesse, go ahead and take it away.
Our third and final poll question is, does your organization have a defined risk management strategy on vendor financial health reviews? Yes, no, somewhat, other, or not sure? Raman, let's answer one more question from the audience. And this next question is, if a vendor has a high financial health risk profile, what should we do?
Thank you, Jesse. So when you identify certain risks in your vendor financial reviews from their financial health profile and you receive some sort of high risk score, don't be alarmed, but it definitely is a red flag, or maybe a combination of red flags that you should look into further. So the immediate reaction should be to inquire as to why you've landed at that risk rating based upon either your internal review, or if you use an outsourced service or solution provider, how they arrived at that, so that you can address those specific red flags or those specific qualities that led to that high risk rating directly with the vendor. So take some notes and take some action based upon what the identified risks are and work directly with the vendor to answer the mitigants around and provide some information around that risk. From there, you can take a course correct action or perhaps look at alternative vendors if you're not satisfied with the situation at hand or based upon the vendor's response. So the immediate reaction should always be to inquire for more information and perform some additional oversight. And then from there, you should start to look at either your exit options using your contract as enforcement, or perhaps just override the risk if the information that the vendor has provided is sufficient and meets your risk appetite and what you've defined as your risk strategy internally. It's not always the case that any sort of financial health risks require immediate action, but sometimes they're being proactive about it can be very helpful too. Back over to you, Jesse.
Here are those results. Thanks again, everyone, for answering this question. Before we continue, I would like to mention that we have our 6 actions to take after reviewing a vendor's financials infographic. Once you have reviewed your vendor's financials, it is critical to continually monitor and assess the vendor's financial health. Grab this resource to learn the 6 steps to take after reviewing your vendor's financials. Let's continue with the presentation. Back to you, Raman.
Thank you, Jesse. And let's just quickly sum up what to do with all this information and how to use it in your internal program. So it's important, as you probably could gather from some of this information, to be proactive as much as possible, right? So now you know how to at least understand some of the quantitative and qualitative information and then ultimately how to risk rate it. But you should work diligently to address and mitigate those risks that you've identified, right? It's not just important to just identify those risks. It's also good to take action when action is relevant, right? So you shouldn't remain static in your reviews, and you should do them on a continual basis and a continual cadence, because just because there is some sort of financial health profile today doesn't mean that financial health profile is going to be the same in future periods. So don't stand still, don't stay on your heels, be proactive as much as possible, if I were to sum it all up for you. Additionally, vendor financial health reviews shouldn't be done in a silo or in a vacuum, right? So you want to cross-collaborate and work with different parts of your team, even if you are the different parts of your team as someone who wears many hats, a Jack or Jane of all trades, right? But you'll want to work with different people, if possible, to understand what to do with the documented risks on the financial health reviews and the action plans behind them, and that fits your risk appetite and your internal risk management policies and procedures. You'll also want to review the contracts and the SLAs to see if you can enforce something beyond what has been said in action or what your contract may say. And again, you want to do these on a regular basis so that you're not remaining static on certain reviews and the information that you're relying upon, because things change. And it's always important to really look at your contracts, both at the point of onboarding or pre-contract and vetting periods, or on a regular basis during the renewal or during perhaps a risk identification that you put forth after you perform these financial reviews, right? So the contracts are your best enforcement ways for enforcement around certain things, right? So if you want vendors to provide you regular financial information so you can perform regular reviews on a good cadence, include that in your contract. That's as simple as that. And if they are breaching certain provisions or they may not necessarily meet your risk appetite, put something in there that particularly pertains to having some sort of oversight into their financial profile and their financial health. So contracts are always a great opportunity for you to make sure you have some rigor and some teeth behind enforcing vendor risk management programs and policies you have put forth. So to summarize, here are some key takeaways from today's session. Hopefully you all found it helpful, but essentially financial health reviews should be done as regular as possible at a minimum on an annual basis so that you're being proactive, as we talked about. You should cross-collaborate and involve various people internally as well as externally if you outsource any of this work. It's important to create an audit trail and some sort of documentation, both in your internal processes as well as the findings that you have. And then you want to take action, again, as we've mentioned. So use your contracts and use just your overall program requirements and needs and maturity to continue to evolve as a business and as you bring on new vendors and explore new relationships with vendors. So hopefully with the information we provided today, you can take some of this back to your own organizations and apply these best practices for performing more adequate, more thorough, and hopefully very efficient vendor financial health reviews. So with that, we'll turn it over to Jesse and open it up to questions, I believe. So thank you all and look forward to hearing some of your questions and answering them in the next few minutes. Appreciate it.
Great. Thanks so much, Raman. Before we dive into more questions and answers, I would like to thank everyone for attending. I would also like to thank Raman for his time in sharing some important information. On your screen now, you will see our upcoming webinars. On April 2nd, our third-party risk management lifecycle, Managing Vendor Risk from Start to Finish webinar. And on April 16th through 18th, our third-party risk management bootcamp. We hope you'll be able to join us for those sessions. A link to register for those is in your copy of today's presentation slides. Let's now go ahead and answer some more questions that have come in during this session. Okay, Raman, the next question is, what can we do for financial reviews with non-responsive or non-cooperative vendors?
Thank you all, and again, thank you all for joining today. It's hopefully been a great session and informative. And as always, if you need any sort of support, reach out to us and we'll hopefully answer your questions and answer some of the questions you guys have been pushing through the live chat as well. But from a perspective of non-responsive vendors or non-cooperative vendors, that's a common question and a common pain point that many of you face. And there's alternatives you could use. So something like a Dun & Bradstreet report or an Argos comprehensive report is always available or generally always available, and it pulls from public domain data. It gives you a high-level understanding without even depending on a vendor. It's not going to be as comprehensive, but it will at least give you some visibility to it. But if you want to deal directly with the vendor, you can always reach out to them and try to get their management team or someone who signed the contract with you and your organization on the phone to go through some of the questions that we talked through today. So things like, does the vendor have enough capital and cash to support their ongoing operations? Can they support your full contract period? Trends into their hiring plans, trends on their revenue, things that basically support high-level financial overviews and give you some insight and information if they're not either cooperative or they don't want to produce any sort of financials. So hope that helps. I know that was a common question and typically is one of the main pain points a lot of you face in your day-to-day oversight and review. Back over to you, Jesse.
Great, thanks, Raman. Next question. Should we perform financial health reviews on every vendor? And if not, which subset of vendors should we focus on?
Another common question. So generally speaking, I think no one has the time in their day unless they have a significant amount of staff or just do this day in and day out, especially when you're dealing with a large vendor base. So the best practice is to focus on the most critical vendors first, and then focus on those higher risk vendors second. So if you're gonna get the best bang for your buck and be concise with your motions and your activities internally, focus your due diligence activities on your critical vendors because those are the most important to your organization, and the ones that have identified or you've identified some sort of high level of risk or any sort of risk associated with them. Beyond that, you can use ongoing monitoring tools and other capabilities to keep a high level oversight on some of these vendors. That can be sufficient for many of you that are regulated or have an examiner looking at your audit trail and some of the things you're doing internally. But if you have the staff or you can outsource and have the budget to perhaps do this for even if you're just focused on your critical high risk vendors or beyond that, it's always good to kind of extend into more of your vendor base and do it over time. You don't have to do it all at once beyond those critical and high risk vendors. So hopefully that helps.
Great. Our next question. Beyond financial health reviews, what else could our organization do to better understand the financial risk that exists within our vendor base?
Yeah, so this is where some of the holistic combining and cross-collaboration work, combining the work you do from a financial health overview with other internal and vendor risk management processes is important, right? So like we talked about with the domino effect, financial health is just one domino, right? It's not necessarily the silver bullet that leads to, everything else, but ultimately can be indicative of other areas of the business, right? Because if a vendor is not financially viable, they may not be investing in security systems if they're in the physical security business, or if it's an IT business, any sort of IT security and controls therein. So working with your CISO, working with other team members that are not subject matter experts on financial health is always a good best practice. You may be that subject matter expert internally, like we talked about. You may be the Jack or Jane of all trades in your organization and wear many hats. So focusing on things like business continuity, I know that was a question from some of you about what you can get, focusing on things like their cybersecurity posture, focusing on other areas, even as it pertains to their full contract and some of the other terms and conditions within the contract that you're either renewing or entering into a vendor is important. So don't look at this in a silo. Work cross-collaboratively with either your procurement teams or your other vendor risk management team members, or even if you have your CIO or CISO or some other executives involved at a high level, it's good to combine what you do on a vendor financial health point of view with some of the other oversight tasks and due diligence tasks you have implemented or put in place for your third-party risk management program.
Great. Next question. Who in our organization should lead or perform financial health reviews?
Yeah, so you'll want to have someone who at least has oversight into your overall third-party risk management or risk management program. So put simply, it doesn't have to be someone who's a CFO or someone who has a CPA or is licensed, but it at least has to be someone who has an overall understanding and has defined the management procedures and processes within your third-party risk, vendor risk, or supplier risk management program. Beyond that, if you have the budget or if you have the staff or can outsource this to a subject matter expert externally or a tool set externally, you can rely on those professionals to be the folks, the boots on the ground that are actually going to do the work for you. So this is where some of the deliverables come into play. This is where some of the data into what's good, neutral, and bad when you start looking at the line items. This is where you can actually define what your overall risk appetite is and then let those personas or let that dedicated staff or outsourced staff essentially do this work for you. So those people should be experts or should have some licensure or some capability to at least provide you some scale and some throughput. But they will report into you internally that control the overall risk management programs and procedures that you're doing. So take that in mind. Again, you don't have to be, CFO, you don't have to be someone who is in finance to ultimately perform this work, but it's always good to at least have support from someone who has the expertise, because it will help you be more efficient with your time and probably save your time for highest and best use activities beyond just financial health, because this is, again, just one leg of many of a table when you're looking at different risk reviews and different risk domains in a third-party risk management program holistically.
Great. Thanks so much, Raman. Unfortunately, that is all the time we have left for questions today. Thanks again, Raman, for taking the time to address some of those that came in. Any questions we did not have time to answer today, we will address offline. We would like to thank you all for attending and hope you found today's session valuable. Another big thank you to Raman for his time and content. You can ask even more questions inside of our third-party think tank, an online community that is dedicated to third-party risk professionals and free to join. Just because today's session has ended doesn't mean the conversations and questions must. Post your questions at thirdpartythinktank.com and see what your peers have to say. In the community, you'll find thousands of free educational resources, including ones related to vendor financial health. If you would like to become a member of Third Party Think Tank, you can register on the site or shoot us an email and we will get you registered and send you a link to set your password. We did record today's session, and that recording link will be provided to you in a follow-up email that you will receive tomorrow afternoon. Also in that follow-up email will be the survey link for you to request a CPE credit. On behalf of VendMinder, it has been a pleasure. Thank you and have a great rest of your day.